Owner-occupied commercial real estate financing, explained like it's simple. And for many business owners, the monthly rent check is one of their largest operating expenses. Yet every payment builds wealth for somebody else and not for you. Owner-occupied commercial real estate financing allows businesses and their owners to purchase the building that they operate from, transforming a monthly expense into a long-term investment. So whether you're buying an office building or a warehouse or a retail center or a medical office or an industrial facility, understanding your financing options can save hundreds of thousands of dollars over the life of your loan. So what is owner-occupied commercial real estate? And an owner-occupied commercial property is really one where the business owner is going to occupy at least 51% of the building. So mostly owner-occupied is the thought. We do have some lenders who will do it less, but that's another topic. So some common examples could be with medical offices or dental practices or law firms or CPA offices or retail stores or restaurants or manufacturing facilities or warehouses or automotive shops or contractor shops or professional office buildings. And rather than paying rent to a landlord, your business becomes both the tenant and the owner of the property. So why business owners will choose to buy. And owning your commercial building will create several advantages beyond simply eliminating a rent payment that has no equity growth. And the first topic is when you own it, you're building equity. So every mortgage payment is going to increase your ownership interest instead of enriching somebody else like your landlord. Two is fixed occupancy costs. So commercial leases often include escalating rent at certain intervals, and ownership allows many businesses to stabilize their occupancy costs over the long term. There's also potential tax benefits, and commercial property owners may benefit from depreciating the building, the mortgage interest deductions, any expense write-offs for repairs or maintenance, but also don't forget cost segregation opportunities. And always consult your CPA regarding your specific tax situation, but I think even they will get on board with that. And appreciation. Over time, commercial real estate may appreciate while simultaneously helping your business build wealth. All right, enough about why. Let's talk about some common owner-occupied loan programs that you can use. So there's SBA 504 loans, and these are ideal for owner users in growing businesses in manufacturing or medical or industrial or office buildings. And some benefits there is there's longer fixed rates with lower down payments and longer amortizations. And generally, you're going to create excellent cash flow. SBA 7A loans. And these are great for mixed-use properties and business acquisitions and restaurants and hotels and special purpose properties. And these can often include equipment and working capital, or if you're just looking to acquire a business, it does do standalone business acquisition financing. But there's also conventional commercial loans. And banks and credit unions are common to finance, say, office or retail or industrial or flex space or warehouses. And some typical features there include, say, 20 to 30% down with competitive rates and multiple fixed rate options, usually in the 5, 7, or 10-year variety, 20 to 30-year amortization. Construction financing. So if you're building your own facility, construction financing may include land acquisition or at least land payoff, vertical constructions, any tenant improvements, any interest-only payments that you accrue during construction, and then you can convert to permanent financing upon completion. So what lenders evaluate? And commercial lenders generally are going to review your business's financial statements and their tax returns and your credit history and the business cash flow and figure out what your debt service coverage ratio would be. And then it's a property appraisal and what industry experience you have and your personal financial statement. And strong documentation often leads to more favorable financing terms. So which properties qualify? Well, owner-occupied financing is available for many property types. And some of those would be, say, medical offices or dental offices or veterinary clinics or office buildings or retail centers or strip centers or warehouses or industrial buildings or manufacturing facilities or flex buildings or churches or automotive properties or daycare centers and just professional offices. So, should you lease or should you buy? Well, buying isn't always the right answer, but many businesses or many established businesses discover that ownership creates more long term financial advantages than renting does. And when comparing options, look beyond your monthly payment. You need to evaluate what equity you're creating with each payment and the tax implications, any appreciation potential, the ability to expand in your current building, and your occupancy stability. But also your exit strategy. What do you do when you're ready to sell? And for many business owners, owning the building becomes one of their greatest wealth building assets. So, why work with CommLoan? Well, every commercial property is going to be a little bit unique. And through the CommLoan Empower program, business owners gain access to hundreds of commercial lending sources, from SBA financing and conventional bank financing to construction loans and bridge financing and medical office financing and retail financing and industrial financing and office financing. And you have capital advisory expertise with a commercial mortgage advisor. And the point is, instead of just shopping one bank at a time, we're going to help you identify financing solutions tailored to your property, your business, and your long-term objectives. Are you ready to own your business property? Well, whether you're purchasing your first commercial building or refinancing an existing property, selecting the right financing structure is just as important as negotiating the purchase price. And the right loan can improve cash flow and preserve capital and position your business for long-term growth. And that, my friends, is it for the day. Thank you for watching. Please visit my website, billrapp.commloan.com. You can start a pricing quote and schedule a consultation so that way we can have a conversation. Thank you for watching. Have a good day.